Hi guys, I'm doing this video as an update from last week's video where I gave you some trades and they're very much still in play. So if you haven't seen that video, go back and watch it because the trades are still in play. BAE Systems, I'm still stalking that market. I think that it's very much at the point where it's going to start struggling. I have a few trade ideas, all of them are FTSE 100 companies in this video. One of them is a standout. You won't see many setups like this, massive opportunity to trade. So what I do want to do is just say, I'll keep making these videos all the time, people are watching them. So I had a few subscribers after my first video last week, and if that carries on, I'll keep making videos, so spread the word. Also, this is a promise, I'm never gonna monetize my channel, like put an advert in front of your face, because I'm gonna use it to promote my own book, Investment Economics and Risk. So if you're into investing, take a look at this book. Took me nearly a year to write. So yeah, spread the word, let some people know about it. I'd appreciate it, and I'll keep making these videos for you. A little bit about me. I want to be trading full-time within a year. So this is basically my journey to get to that step. So I hope you enjoyed this video. I hope that you learn a lot about the analysis. Any questions? I probably will be posting some general tips like trading psychology tips and stuff like that in the next month or two. So just give the video a like, subscribe and spread the word. If you're a member of any forums, then post a link. More people that watch my videos, the more frequently I'll do them. The first trading setup that I want to discuss is Tesco, and it is in a general uptrend here because you've got this ascending support line. But what I've noticed is you had a gap here, market broke down, and now it's gone up, filled the gap, failed at the 200-day moving average, broke support of this channel, closed below. I got short and the market did close marginally lower, but then I expected a bit of a bounce, and I thought that what could happen is the worst case scenario. If I was short, I thought the worst case scenario is you might get a back test of this, but this caught me off guard, this big up day. It's actually, if you look at the hourly chart, it's actually closed slightly below the line, but this chart in software shows it that it's closed above support. I'm not too confident that it has closed above support because, as I say, on the hourly chart, you can see that it's closed below. So I think there's a good chance of what could happen is next week we could dump, and I think the immediate target is 210, maybe down to £2 per share, but I wouldn't short it any lower than that because it is near this trend line. The next setup I want to discuss is actually British Telecoms, BT, and the reason why is that the market has trended lower lows, lower highs, blah blah blah. Looks like we're putting a bit of an inverted head and shoulders here, but the significant thing for me is we finally got back above this 200-day moving average, and I think that's quite significant because we had quite a pop there, and we've come back to back test it. You see that how we've tested it. I think that this is something that we need to watch. I'm not convinced we're really going to get a buy signal, but this week, but I think that you need to watch this resistance, because if the market starts closing up here, has a little pop, you might get a back test where you can see if it holds. If it does, you can buy, and I think that you could go on quite a nice rally there. It is a bit of a high risk trade. I like to see some momentum in the market before I buy, but if you are quite aggressive and you like to buy bottoms or what you think is a market bottom, and this is certainly something you could consider. I would say a lot of the time you get a pop and then it will back test. So just be aware of that. If you do buy a rally, be careful where you put your stop loss, because you could get stopped out on a back test and then the market move up higher. But I've got a much better trade to show you. Before I do, I noticed this. This is EasyJet, another FTSE 100 company. It looks to me like you could have a bit of a bull flag here, and I think that we could test the 200-day moving average, which is about £14 per share. And I've highlighted here a few bull flags as well. Not all of them are working. You can see one here didn't work. There was another one here, quite similar, didn't work, the market broke down, but most of them have worked in the past. But I just wanted to highlight, I think that this is a bull flag. Potentially we could go higher, but I'd like to see a close above this on the daily before I buy. And here we have pick of the bunch. This is Melrose, the ticker is MRO. And this is a beautiful setup. I can't wait to trade this, but it's not going to be easy pickings, this. And I just want to talk through some features. So from 2016, the stock didn't really do anything for years, and then all of a sudden absolutely exploded. I mean, I don't know too much about this company. It's a FTSE 100 company. I don't know a huge amount about them. I think they buy other businesses to turn them around, but I've not seen a share perform this well in so long. And it's a good thing, but obviously the quicker you go up, sometimes if the market doesn't really pause, then it means on the way back down, it can be quite aggressive, because if there's no strong supports here, like if there was a strong resistance and the market really tried for ages to get above a price and then went up, then on the way down, that would be a very significant support, but there's nothing. And it makes me think that actually what could happen is this market could absolutely dump. The thing that I want to show you is it got below the 200-day moving average. So the first thing to consider, look how quickly this went up. It got underneath the 200-day moving average. It was sort of trendless. It was going sideways for a while. But as soon as this line, this was sort of like a line in the sand. As soon as the market broke below that, the sell-off was very aggressive. I absolutely hate trading triangles. But this at the moment looks like a symmetric triangle, which is a continuation pattern most of the time. So we could get short up at this resistance, or we could wait for a breakdown. But either way, this targets around 120 per share. That is a massive move in this market, and it could happen quite quickly, but I expect this to be quite volatile. I think that this is a very good trade, and I'm going to be looking to get short this week, but I think this isn't going to be an easy trade to take. I think it's going to be quite volatile. The reason why I hate trading triangles is so many times before I've been caught out, because you can have what looks like a symmetrical triangle, and if you was waiting for a close below the support to get short, I've seen these triangles morph into like a wedge. So you're short thinking that you've sold the breakdown, but actually it's just that the triangle's turning into a wedge and this is now support, and then you realize that you've actually sold right above support. So I don't like these things, because they can mature, and over time you sell on resistance here only for the market to go up, and then you realize, oh, actually this is just expanding. So I don't like these, but I think that this is a good setup, and the risk versus reward is there, because look how quick this market went up. It can go down equally as quick. So this is something that I think we need to keep our eye on. Maybe in the next week or two we might be able to find an opportunity to sell.